Crypto Hotep here with another investing video. Happy New Year. It's week 52 of the Family Portfolio and Dividends Tracker. It's been one whole year since we've started these videos. Now, if you're unfamiliar with these videos and the tracker, feel free to go to week number 1 in my channel. That's where I go across the whole methodology, and that's where everything started. Basically, in a nutshell, I gave my family a short list of stocks. They chose stocks that they liked and companies they liked. We then proceeded to use M1 Finance as our broker of choice. With M1 Finance, if you're unfamiliar, you can create a big portfolio and then have sub-portfolios within that. And with our family portfolio, every one of our family members has stocks of his or her own choosing in the sub-portfolio, and then every week we go through this portfolio. We go through everybody's stocks. We go through balances, my favorite part, dividends, and any news, announcements, earnings, anything that's happening in the market. And we just chart and track our investment journey. These videos are for my own edification first and foremost, and I hope my family finds them helpful. If you do find them helpful, feel free to like, subscribe, comment, let me know what you think. But by no means is this financial advice. With that being said, we'll jump in here, but before we go to week 52, let's go to week 51 and just see where we were at. So week 51 last week, we were at 1952.14 for our balance. We had $5.22 of dividends earned, a market gain of a negative $53.26, with a money-weighted rate of return negative of 2.65%. This week, still not looking good, guys. Still not looking good at all. The market has continued the downtrend, and your eyes aren't deceiving you. We have now broke below 1900. So we're sitting at 1830 and 88 cents. We have not sold a single thing. This is just market volatility right here. As you can see, we have a money-weighted rate of return of a negative 10%, market gain of a negative $190.11, and dividends earned of $5.62. One piece of encouraging advice, though, is when in doubt, zoom out. So we're going to, because we are at week 52, we're going to see where we were at 1 year ago. And March 13th, 2024, we had a balance of $443.68. Now we have a balance of $18.30 and 88 cents. That is amazing. That's encouraging too, because if you stayed with these videos week after week, this is an amazing feat to save and invest this amount of money in a short amount of time here in just a year. So if you are having a bad look at your portfolio, if it's in the red, where everybody's is in the red currently, just feel free to zoom out. Look out a year, 2 years, whatever it is, and just remember we're in it for the long haul. We are in this for the long haul. These little peaks and valleys of volatility mean nothing. But let's go to our activity and let's see what's been going on. So between last week and this week, we had several dividend payments. We had dividend payments from Exxon, Chevron, and Microsoft, which is nice. Again, only 3 cents, 12 cents, 9 cents, but again, we're building up our positions in those companies, so essentially we can build the dividends up as well. We also deposited our bi-weekly amount of $15. Yes, if this is your first time watching it, we do not deposit a lot. We may get a bonus check or a bonus pay here or there, and then we'll put a little bit more in. But consistently, it's only about $15 or so. And we were still able to crack over $1,000 in under a year with this amount. So what did we buy? We bought Costco, Meta, Tesla, because Tesla is on a discount right now, and Target, which is also on a discount. So let's go into the portfolio. So we'll go bottom to top as always. And so we will go to my wife. Unfortunately, is at the bottom. Year to date, weighted rate of return is a negative 12.24%. Market gain of a negative $18.26. Dividends earned of 46 cents with a balance sitting at $150.06. Celsius is up year to date for the portfolio for my wife. Pepsi's down over 1%. Not really worried about that. Google, I believe, is at a great buy currently, especially with technology, AI, especially with AI and quantum computing with Google. I really, really think they are at a fantastic purchasing price right now, and it could get even more discounted. But I think buying the dips on Google, buying the dips on Tesla is a beautiful thing. This is not financial advice at all. Let's go to our middle stocks. Our middle stocks down over 10%, 10.5%. Market gain of negative $20.58. Dividends earned of 60 cents, and a balance sitting at $187.56. So now we're seeing some green here. Starbucks is still in the green. Nintendo still holding the weight, double-digit green, over 16%. But again, Target down over 24%. Tesla down over 44%. That's going to drag anybody's portfolio down, with Amazon and Costco also in the red here. Okay. Let's go to our youngest. Our youngest is down over 7% year to date. Market gain of a negative $15.74, and dividends earned of 33 cents. Now, his balance, our youngest, sits at $226.23. Very familiar, just like with our middle. Nintendo holding the weight, up over 15.5%, and Starbucks up over 5%. But again, Tesla being the Achilles heel of the portfolio, down over 44.25%. Apple down over 15.5% here. Okay. And let's go to mine. So my stocks weighted rate of return year to date of a negative 3.61%. Market gain of negative $25.55. Dividends earned of $2.86. And my balance is at $628.65. So with my portfolio, several things that I was expecting. So I was expecting that technology would considerably sell off. Why? Because technology stocks are very volatile and they are a sell-off asset, meaning that when troubled, quote unquote, troubled times come into play or the market gets spooked, technology stocks are usually the first ones to go. And then money usually flows into more stable type of assets and stocks, such as like dividend stocks. So seeing Apple, Microsoft, Coinbase sell off very dramatically, it's common. It's very common. Me personally, I like my technology sector in my portfolio. These are fantastic lists of stocks. And I think we're getting them on a discount here, so I don't mind buying these stocks at a cheaper price. But I was expecting the technology sell-off, so this does make sense. I'm not really worried about this at all. When you've been through a couple of these cycles, these dips, yeah, it stinks to see your portfolio down so much, but at the same time, it's just a matter of time before you get a V-shaped recovery and price goes back up. Industrials and energy, I'm not surprised by this either, because I told you guys, if you've been following, that industrials and energy would be holding the candle for my portfolio, and they're up over 4% still, even with this market sell-off. Consumer and staples is down over 3%. Finance down over 3%. Restaurants and food surprisingly is up over 5%. Hershey up on Hershey, up on McDonald's, Domino's Pizza, the Smucker Group, Starbucks, and the GOAT of all GOATs, Coca-Cola, double digits, up over 12% year to date, Coca-Cola. Again, as I mentioned, Coca-Cola is a dividend king, and that plays into the fact of my previous statement saying that money would maybe shift out of volatile stocks like technology and go into more quote unquote safer investment choices for stocks like dividend stocks, i.e. Coca-Cola. Real estate down over 2.5%, and then pharmaceuticals up over 5.5%, which is good. And then the only other player besides technology that is down double digits in my portfolio is obviously our growth in our meme stocks, which only hold a small portion of my portfolio. Again, I was expecting this. Growth in meme stocks, very volatile. Palantir's up over almost 5.25%, but this is where we house Tesla. Tesla holding true, down over 40% here. CrowdStrike down over 2.5, almost 3% here, and then MicroStrategy following suit with Bitcoin down over 9.25%. So again, you have to be familiar with these stocks and the mannerisms of these stocks, and understand that if you invest heavily in technology, your portfolio is going to go on a wild ride. When the times are great, it looks fantastic, but be ready to stomach those prices when it gets to a discount, and to flip your mindset in understanding that if the prices are lower and your portfolio is getting battered, that means you may have opportunity to buy those companies at a cheaper price. But I think the one thing that people make a mistake on is fully exiting the market and quote unquote waiting, when all you have to do is really just dollar cost average in like we do every 2 weeks, and just continue to buy quality companies and hold them. So last but not least, let's go to our oldest. Our oldest down over 16%, 16.5% year to date. Market gain of a negative $109.97, with dividends earned of $1.37, with a balance of $638.39. So again, Tesla, whole family invested in Tesla if you haven't caught on, but down over 40% on Tesla. Down almost 5% on Costco, which is a little bit of surprise, but 5% is really nothing, at least to me. McDonald's up almost 3%, over 2.5% here, and then Apple following suit with everybody else, down over 17%. Little bit of a saving grace in the markets, I will say, is CPI did come out this week on March 12th, and we actually trended lower than what was forecasted. So what was forecasted was a 2.9% rate of inflation, and we actually reported 2.8%. Why is this a big deal? Well, if we look at the previous, if I can click this, if you look at the previous CPI, the CPI ratings here, or percentages, you'll see what I mean. So we, in the past months of January, December, November, October, September, August, it wasn't until July of 2024, or I would say they reported it on August for July CPI 2024, that we trended downward on inflation. That's the first time that it's ever happened. Since then, we've either had inflation come in line, meaning that if we forecasted, for instance, here 2.5%, and we reported 2.5%, nothing changed. We were in line with that. Or we had a little bit of an uptick, like in October. We forecasted 2.3%, but we reported 2.4%, or February. So this is the first sign of inflation actually going down or coming down, which is actually a pretty good sign for the markets. I know there's a sell-off right now, understood all that, but I think optimistically looking ahead, I think we'll be in a good spot here. So with that being said, we will cut this video out for week 52, 1 year of the family portfolio under our belt, and many more years to come. If you found these videos helpful, feel free to like, subscribe, comment, let me know what you think. But as always, thank you and happy investing.